Good morning all, and thank you, Rick, for your kind words and also for inviting me to present to you all this morning. I'd also like to thank the ASC for considering my thesis as a worthy finalist for last year's Imbert Award. It was totally unexpected, but very much appreciated. Just by way of introduction, I know there's a spiel about me on the introduction for the ASC Spring Conference this morning. But my background really stems back from my days in Africa and Zimbabwe, or Rhodesia as it was known as then, where I got involved with risk, particularly life insurance, and then the risk of living too long, pensions. And I gave risk a bit of a side berth towards 2000. We definitely fast forwarding very quickly here. To where I became involved with sanctions compliance and anti-money laundering. And I think that's what really piqued my interest in security matters. COVID came along, and of course we all have a COVID story, and I decided to move out of anti-money laundering and decided to do a master's degree. So Rick, thank you very much for considering me a student. It makes me feel much younger. But it was certainly one of the most valuable things I did. And the thesis I did really came out, as Rick said, was left field, in that it sort of tied in with my risk background. And I then started really getting involved with the risk management and thought of how is terrorism actually insured? And of course, terrorism is very much, or counterterrorism is very much something that runs through my blood right from the early days of my life. The subject of my thesis talks to the role of the government in the resilience of our economy in the event of a terrorism incident. And it analyzes practices and models across the G7 countries plus Australia. And I'll talk a little bit about the Australian model a little bit going forward. The thesis itself, as I say, was really intended to provide a source document as little had been done from an academic perspective on terrorism insurance. It was also intended to inspire other academics who may wish to study this, what I consider a fascinating aspect of terrorism. Today I will touch on the subject of my thesis, but more importantly, I'll be touching on the subject of resilience, and there'll be a lot of mention of resilience in here, which I think is, we all think about risk, but what is resilience, and and what should we be doing around resilience? And so hopefully I'll be giving you some food for thought there. Later on today, you'll hear presentations that concern security in public places. And when I had a look at the schedule for today, I thought, wow, what a way to start a day. It's a beautiful day out there, and you're going to have an academic talking on insurance for half an hour. How low could you get? But I hope that it will be of interest, will be of more interest to you. And I will be followed by Nick, who will be talking about some of the incidences in London Bridge, which is very much first and foremost in my thoughts as well. Okay, let me just give a little bit more introduction. On the slide, you will see two logos, one of which you'll be relatively familiar with because you would have seen it on every other slide, and also it's out in the foyer. And the other one is March Strong. Now, March Strong is a brand new risk consultancy. It's made up of myself and my business partner, Julian, who was going to be here today, but unfortunately pulled out late last night for personal matters. And we are both fellow graduates from the class of the counterterrorism class, risk and resilience class of Cranfield 2024. I'll be available if you would like to get to know me better during the day, if you'd like to avail yourself of the services that we're looking to offer, or indeed if you wish to chat about any of the specialisms which are outlined on the slide before you. Right, let's get on with the presentation. Okay, my thesis. So the thesis itself, just as a very broad overview, examines the evolution of terrorism and its impact on commercial and industrial property and businesses. It analyzes the pivotal events that shaped the provision of terrorism cover over the years, and in particular the 9/11 atrocity in New York in 2001 and the Baltic Exchange bombings in London in 1992. Now, for those that didn't know, that these two events had the effect of collapsing the terrorism insurance market in their respective countries and pretty much globally, thereby demonstrating the volatility and fragility of the insurance market and its domino effect of our economy. It then examines the respective frameworks of the G7 countries and Australia and their respective effectiveness. Noting in particular that Australia seems to have gone one step further in that it now treats climatic event risk in a similar vein to that of terrorism risk in the form of building superpools, which in my mind accurately reflects the true risks to our world today. The thesis then addresses the government involvement in stabilizing the insurance industry in the UK, particularly following the Baltic Exchange bombing, highlighting that this was only intended to be a tactical move with the strategic intention of moving or returning risk back to the private sector. It then debates whether terrorism is really a risk that commands the attention that it currently does. And lastly, the thesis identifies insurance as the key mechanism for the transference of risk. Right, let's add some context to what I've just said. So as security consultants, we may all be aware of the 4 T's for dealing or treating risk. Firstly, we could terminate the risk by eliminating it entirely, by not operating or taking part in particular activities in a particular area. Secondly, we could tolerate or accept the risk without adding controls, basically because the risk is considered to be within our risk appetite. Thirdly, we could accept the risk, but by adding mitigants or controls that better manage the consequences or probability of the adverse event occurring. Lately, we have seen legislation introduced to compel this through Martin's Law, which will be very much a subject of today. And Martin's Law is all about improving protective security and preparedness. And last but not least, we can transfer the risk by outsourcing the activity or by purchasing insurance. And this is the subject of my presentation today. Regardless, if you're not terminating the risk, you should ensure that you have suitable resilience plans in place to manage possible outcomes, and more about that a little bit later. So what do we mean by resilience? Well, academics McKinnon, Derrickson, and Maniena in 2006 defined resilience as the ability of an individual, community, or ecosystem to overcome adversity, to absorb the impact of a shock or disturbance, and then to recover effectively. And the emphasis is on recovery, because as much as we can mitigate and put controls in place, excuse my French, but shit does happen. And it's how do we recover from that? Needless to say, resilience is a cornerstone in our national counter-terrorism strategy. It's mentioned 19 times in the 2023 contest document, and it's fundamental to the prepared strand of the UK counter-terrorism strategy. Before we go any further, are there any Paul Ree people in the audience? So everybody heard of Paul Ree? Yeah. Okay, that's great. I was hoping there'd be some people in here because you could maybe help me field some of the questions that may come up, because I don't profess to be a Paul Ree expert. But basically, for those of you who haven't heard of Paul Ree was established in 1993 as a national resilience entity to support the British market in the face of the terrorism threat by remediating the market failure for commercial property terrorism insurance following the Baltic Exchange bombings in 1992. The Paul Ree's website, it says that it ensures affordable property insurance available to all businesses across Great Britain through the 130 member companies who happen to be primary insurers who own it. And it insures roughly £2.3 trillion of commercial property assets, including airports, shopping centres, farms, and sports stadiums. Just a few interesting statistics relating to Pool Re. Pool Re has actually paid out £635 million in claims from 13 separate incidents since its foundation, which when adjusted for inflation amounts to £1.25 billion. And to date has never drawn on the government guarantee, and more about that in a minute. Currently it has a fund that sits at £6.9 billion to meet potential claims, and it also has reinsurance itself to the tune of £2.5 billion. So the government guaranteed, basically from its balance sheet, Pool Re could support the economy to the tune of $9.4 billion, and the government guarantee would really only need to be invoked at $11 billion, and I'll talk about that more in a second. But what I did want to mention is that in the last 2 months, there have been two key developments in relation to counter-terrorism. Firstly, we're all aware of Martin's Law, and if you're not, you will be by the end of today. It received royal assent on the 3rd of April. And secondly, Pool Re itself issued a consultation paper that is designed to impact the provision of terrorism insurance cover in the UK. We have a fundamental flaw or failing within our resilience plans at the moment in the UK. And this represents a fundamental vulnerability to our economy, and that is that it is estimated that only 4% of our small to medium enterprises, or SMEs, have terrorism insurance. And very few SMEs are aware that terrorism cover is excluded from the packaged products that they hold. So turn that around, that's 96% of our SMEs do not have adequate cover in the event of a terrorist attack. The economic vulnerabilities were further highlighted by the COVID-19 pandemic, which showed that typically SMEs lack resilience when it comes to surviving large-scale shocks. When it comes to surviving large-scale shocks, of which we have seen many in recent times. They don't have to be just terrorism related. We had the GFC in 2007, 2008. We had Brexit, and of course the pandemic, and arguably we've seen the economy struggling to recover following those shocks. It would be remiss of me to say that with Martin's Law, that may have some sort of impact on the take-up of terrorism insurance cover, but this is not thought to be great, since many SMEs will fall outside of the scope of Martin's Law. So how is insurance provided? And I've got up here a slide that sort of illustrates how risk accountability is dealt with in a broad way in the G7 countries, Australia, and in the UK. So we're looking at risk accountability where the base level is covered by individuals and businesses, typically if they don't have insurance or through their excess levels or deductibles typical of any standard insurance product. The next level of accountability sits up at the private sector where insurers assume the liability, and insurers themselves will seek insurance through reinsurance treaties through the commercial reinsurance market. And sitting at the top of the tree there, the accountability sits with the public sector or the taxpayer through the form of a government guarantee. In some countries, that cap is capped at roughly 10 billion of the currency concerned, but in the UK it isn't capped. So that is seen as representing a liability to the taxpayer. So what Pool Re are looking to do is move that private sector bubble, if you like, upwards to assume more accountability from the public sector, in effect returning us to the pre-IRA troubles situation in the market. However, there are many factors to consider when dealing with terrorism risk, and I've outlined some of these factors on the slide here. Firstly is the question of national security. So terrorism represents fundamental challenges to national security and therefore to society as a whole. Academics will argue, a guy by the name of Summer argues that terrorism is a form of war. In war, the burden of casualties are borne by members of the military or the armed forces, typically covered by governments. In terrorism, civilians are involuntary and randomly selected by virtue of their citizenship or happen to be visiting a particular country. And there's no better example in recent times than the Hamas invasion of Israel in 2023. Thirdly, it's argued that terrorism is an ideological reaction to government policy. And then there's the question of the societal and economic resilience, which enables the quick payment of compensation payments, enabling business continuity and damaged buildings and economies to be rebuilt and families to survive in the event of the injury or loss of a breadwinner. Then there's also the question of compensation. Now, compensation arguably comes quicker if it's paid for by the government than it would be through private sectors. And compensation in itself reduces the fear of future attacks and could therefore be seen as a possible deterrent to future terrorism attacks. So all those factors which I've talked about really point to a government not divorcing itself entirely from the risk accountability equation. But sitting on the other side of the equation, and very importantly, is the unfettered availability of a government subsidy could influence firms to recklessly accept risk, to avoid spending on mitigation, which in itself increases risk through the creation of softer targets. Okay, so I was given half an hour to talk. And how am I doing for time? I've got another 10 minutes or so, I think. So I'm going to just wrap up with the key takeaways. Now, I've introduced you to what I call, being an academic of late, the adverse event cycle, which starts with the risk, and you have your risk management plans. An event may occur, and if not properly managed, you'll reach a tipping point, and a crisis will evolve. Your crisis management plans will invariably take over from your risk management plans, and then hopefully the cycle closes with a recovery. Now, the speed at which that cycle is completed and the efficiency really depends on what resilience plans you have in place. So I've couched that cycle with the resilience. So we've covered quite a lot in the last 20, 25 minutes or so. Firstly, we've identified that market coverage is an issue and is a vulnerability in the National Resilience Framework. Remember, 96% of our SMEs do not have adequate terrorism insurance cover. Secondly, the government guarantee has rarely been invoked following a terrorism event. In fact, in the UK, it has not been invoked. And while it would be imprudent to believe that this will always be the case, the continued growth of the pool can only serve to further strengthen economic resilience. Terrorism evolves. Studies of counterterrorism and terrorism will tell you that and in particular, there was an academic by the name of Rappaport who identified the four waves of terrorism, starting back in the late 19th century with the anarchists. And the modus operandi of the terrorists in those days was the assassination of high-profile targets, such as Archduke Franz Ferdinand, the assassination for which, if you've followed your history, basically created the events that shaped the character of the 20th century. That evolved into an anti-colonialism movement and the further introduction of guerrilla warfare, which in itself evolved into a sort of left-wing communist type movement, where we saw a lot of attacks going on in Europe from Red Brigades and what have you. And towards the end of the 20th century and the beginning of the 21st century, and we saw the rise of religious fundamentalism. What's the fifth wave? Many would argue it's right-wingism. But we shall see. Last but not least, resilience planning should be a fundamental consideration when considering security matters, when consulting on security matters. We can do our level best to ensure that adverse events do not occur, but as we all know, when it comes to terrorism, it can happen at any time, in any place, and in any form. With that, I shall close. Thank you very much.